Welcome to Bears in Exile. Today is Saturday, December 24th, Christmas Eve, and this is the weekend market overview. Looking at everything that we normally look at, and my apologies for not having a video out the last couple of nights. We had a major failure on our main rig, which we make all of the videos on, and we had a power supply pop, and it's been all kinds of fun replacing parts, testing parts, and getting everything back operational. So fortunately, just a couple nights. It could have been a week, but we lucked out with what parts we had on hand, and away we go. Starting off with the Dow, 124 points to the upside. You'll remember that before the system went poof, we were back over here with the Bears in firm control, and they were cheering and making merry, and this was the end. And we said that not to worry. The short-term moving averages could bounce off of the long-term moving averages. That is exactly what has happened. Closing above the upper price consensus level for the month, above the 200-day moving average. Short-term moving averages spreading out, although we do have some wobble, and pointing up. Very, very nice. We can also see CCI getting overbought. We can see the stochastics getting into overbought. We can see the 14-day RSI moving average, all important. Also pointing up. This was a key indicator that we've been using this entire time, even during the down move. We were looking at that 14-day and saying, it needs to turn down if this is for real, and it didn't. It turned sideways a couple times, but it never pointed down. That was the key. Up on the RSI, up on the histogram, up on the MACD, getting the bullish cross a day or two ago. So fantastic. Looks great. Very bullish. SPX getting above the 200-day moving average, closing above it. We do need a green bar completely above the 200-day moving average to show that this is for real. And obviously next week, scheduled Santa rally. I personally believe a lot of it happened this week, front running next week. So, but still, 14-day RSI moving average pointing up, good angle. Stochastics on their way up, CCI getting to overbought. Slight downtick on the RSI, uptick on the histogram and the MACD. It does look very nice. We do need confirmation above that 200-day moving average, but we are trying to get the long-term moving averages to separate and become a bullish bar. This is very nice. Crossing over with the middle Bollinger Band, getting below the short-term moving averages. They do need more expansion, but we are right in the exact perfect place for a short squeeze. And on low volume next week, that is even more likely. Very, very nice. The VIX. Okay, we were talking about last week, before it went pop, about going back into the teens and reestablishing the previous range that we had in between 14 and 18. And certainly with the short-term moving averages pointing down, yes, there is a little bit of excessive separation, but still no signs of an upturn. We have no uptick. We have middle Bollinger Band above the short-term moving average. We're below the 200-day moving average. We still do not have an uptick on the 14-day RSI. This is very, very low, along with the stochastics, along with the CCI, along with the RSI, but we do not have an uptick. Once we have that, we know that there's trouble. We know that there will be a bottom of some duration put in, but it is not here yet. TNA, oh yeah. We ended with the miniaturized hammer. Is that going to be enough to stop it? Maybe. Doubtfully, but maybe. We had a inverse hammer the day before that. 14-day RSI moving average still pointing up. Stochastic still moving up, along with the CCI, the histogram, the MACD. Only thing pointing down is the regular RSI. So not bad whatsoever. And just great. We had talked about this sine wave that we kept seeing. So the question now is, we're just a little bit lower than the previous high. Is it going to be time for it to roll over and go back into being a double flat line. We just don't know at this point. We are above the major price consensus level, but beyond that, this is kind of iffy. We did have some for fun trades, which have been listed in the daily running thread when we opened them over the past week. Those did extraordinarily well, and buying them down here and right here, and it was a great time to get out of it. Now, we do have the potential in TNA to go much, much, much higher, and if we do have a very nice break this coming week, and the major part was 45, so it should be somewhat smooth sailing up to 50, but I do want to see what the movement is like come Tuesday before jumping back into it. So those will be listed in the daily running thread as well. Just great. Just great. It was a great, great week, with the exception of the machine blowing up. But moving right along, trying to get further evidence of continued up movement. Here we are with UUP, the dollar. We had the bubble corrective move, which we described in the daily videos, and we're just kind of hanging out there. Notice the middle Bollinger Band trying to get above the short-term moving averages. We do have a bullish bar, very strong one in effect here. We are still above the major price consensus level for the month, but we have the 14-day RSI moving average ticking down. Now the stochastics are kind of mixed. The slow is going down, the fast is ticking up, CCI is ticking down, side tick on the RSI, down tick on the MACD with the bearish cross, down on the MACD histogram. So it does look like we should be going in for a bar retest, which would be very nice for the market. Now we do have the very strong bullish bar in effect, so if it goes down, it should tag it and hold. At that point, we'll need to see if it is going to wear down the bar, try to break the bar. If we have complete separation prior to going to the bar, we know that it's going to try for a break. If it doesn't do that, it should hold, and then we'll need to have further evidence of whether it's going to bounce off of it or sit on it. And with the 14-day RSI being there, I would imagine it will go down and sit. Still, that gives plenty of room for the market to run up, and very, very nice. As long as the market does what we think it should do or will do, doesn't matter if it's going up, doesn't matter if it's going down, all that we're here to do is to make money. We're not locked into an ideology of bearish or bullish. We are only in the ideology of make money. Now, moving right along to FXE, the euro. Oh yeah, we had that uptick, very slight. We started to have doubts about whether it would be fulfilled within its time. It did not fulfill it. We weren't able to say it has not fulfilled it because the machine was down. We had an updated uptick target a few days ago, giving us 4 days. Well, this will be the third day on Friday, so Tuesday will be the fourth day, in which case that will be a failed uptick as well. But certainly it is possible. You can see that the 14-day RSI moving average has leveled out, but it is not pointing up yet. It is just leveled out. Stochastics are mixed. CCI ticking sideways, uptick on the histogram, uptick on the MACD, not yet a bullish cross, side tick on the RSI. So very much a holding pattern right here while we wait for more news, and it will decide what it wants to do. But certainly with UUP looking more like it should go down rather than holding sideways or going up, this should go up and at least resolve those upticks, although they will have missed the time target. Now, if we were able to get a real uptick on the 14-day RSI, then certainly it will look like we'll be going up for a bar retest, but it is just too early. We need to make sure that it actually ticks up. GLD, oh yeah, going back in for a retest of the 200-day moving average and not doing so great. 14-day RSI moving average is still pointing down. You can see mixed on the stochastics, up on the CCI, up on the RSI, up on the histogram, and the side tick on the MACD. We need that 14-day RSI moving average to turn around and give us the proper move against the 200-day moving average. SLV, yep, short-term moving average is pointing down. 14-day RSI moving average leveling out. We need to see which direction it's going to go. It could go either way. uptick on the CCI, mixed on the stochastics, up on the RSI, up on the histogram, side tick on the MACD. We don't really have too much to work with this as of yet. We need that 14-day RSI moving average to make up its mind. And so we're just going to wait on that. All right, we had pointed out on, I believe, the last video of a inverse head and shoulders on the Dow. Shoulder, head, shoulder, neckline. Well, the neckline has been busted, and we were talking about it's 1,000 points to the upside, getting us to 13,200 if I remember correctly. And so if this is the beginning of that move, wow, there's so much to go. 900 points to go to the upside. Very, very nice. But I do want to see UUP and FXE properly turn to confirm that potential move. And I want to see the temperament of the market come Tuesday. So there you have it. Glad to be back. Been itching to make videos these last couple of nights. And there it is. Everybody have a very, very wonderful, merry, and safe Christmas. And we'll be seeing you on Tuesday. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.